Hi, this is Daniela Camboni in Fort Lauderdale, Florida, where we just wrapped a fantastic gold stock analyst day. Here to tell you that our beloved guest, Rick Rule, who is one of the people I respect most in the natural resource sector, is partnering with my company, Stansberry Research, in a major way. It's something we have never done before, and it could be a pivotal moment for you personally. Rick warns that we are at a unique moment in history, the likes of which he has never seen in his 50 years of investing in the natural resource sector. And he says if you get this one thing right, you may never have to worry about money ever again. So for all the details of his big prediction and the project that Rick is working on, go to rickevent.com right now. Again, that's rickevent.com to hear about the once-in-a-lifetime financial event Rick says is happening right now and will impact nearly every asset you own. Let's get to our segment today. Hi, this is Daniela Camboni, continuing with our coverage from Gold Stock Analyst Day. Joining me now is Rudi Fronk, President and CEO of Seabridge Gold. Rudi, always good to see you, and you can't complain about the setting here.
This is my favorite part of the conference, Daniela.
Well, we have a lot to catch up on. I mean, I can't believe it's already been 1 year since you announced, exactly 1 year ago today, that Sprott was financing $225 million. So I want to know, 1 year later, how's life been for Seabridge and Rudi?
Very busy. It's been a great year in terms of accomplishments at KSM. We updated a pre-feasibility study that shows a much improved mine plan with much better economics, and we've also advanced substantially started activities with the financing we got from Sprott.
I was speaking to John Duty before, and he was saying this is going to be the year for Seabridge. He's that bullish on Seabridge. Obviously, you would agree.
I am, as is my wife. My wife keeps telling me that this is the year, it's time.
Everything just seems to be perfectly aligned. Talk us through some of the goals for the company, what you want to meet.
Well, we've made it very clear over the years that KSM is a project that's too large for us to develop on our own.
The largest in the world? Is it the largest gold project
in the world? The largest gold and copper project in the world right now in terms of reserves and resources. Our goal has always been to bring a major mining company in as a joint venture partner. With the work we've done now over the past couple of years and the de-risking we've done, and what the industry needs now in terms of new projects. From the gold industry side, they're running out of reserves. From the copper side, they need new projects to sustain demand going forward. So we think our timing is fantastic right now.
You have $133 million
in cash in the Treasury.
How do you want to spend that?
Well, we will continue substantially started activities so we can be in a position early next year to apply to the government for that designation. What that designation does for us, it basically puts the permits in good standing for the life of the project versus expiring 2026. And then also, obviously, it's dialogue with the big companies.
Just something you said in your presentation that I thought was interesting, of how far accommodations at mine sites have come along. And I'm happy for this revelation. You said that you've actually built like en-suite suites and gyms and whatnot for the folks working. So a higher standard of living.
Absolutely, and it's by demand. I mean, to attract talent at a mine site today, you need to have top-end living quarters.
Wow. I mean, I've visited a few mine sites and I saw how they were back in the day. So isn't that interesting? Like, I guess it's hard enough to get folks in an office. How do you convince them to go?
Yeah, especially when they're miles and miles away from their families.
Right.
So you need to give them a quality of life away from home.
Yep.
So each of our rooms there have ensuite bathrooms. We have a big rec room. We have a gym.
Making a pitch for employment. Rudi, let's talk the share price. Why the pressure on the price?
Well, I think our stock does well when the gold price is going higher. We underperform in a downward trending market, and I think we can all agree that gold equities are very cheap now. Not just the junior companies, but also the senior companies. I mean, Newmont over the past year has traded as high in the mid 80s, and they're now down in the low 40s. It's a tough time to be in the gold space from a shareholder equity side.
Right, and let's talk about all the M&A activity we're seeing. What's your take on it? Is it a good thing?
It's Pac Man.
That's what it feels like.
It feels like Pac Man, and it's the absolute market that we think we need to get our deal done. We've been talking about a joint venture, as you know, for a number of years, but now with the market starting to really focus on M&A activity again, and also looking for new projects to develop, I think our timing could not be better.
Rudi, let's dig a little deeper on the gold price, the Fed. Last year when we spoke, you didn't think that the Fed would be able to hike aggressively. Have you changed your stance?
No, I think they're coming to an end. I think we may see one or two more hikes, but I think the bigger issue going forward is the funding that the Treasury is going to require and who's going to fund those deficits. I mean, the Treasury just announced, the U.S. Treasury just announced that they need to raise close to $1 trillion in Q1. That's more than double what they were estimating just a few short months ago. In the past, they were able to raise dollars by selling bonds and treasuries to central banks. Those central banks are now sellers of treasuries. So where's the dollars going to come from to fund the Treasury? And the second thing, I think, is the debt to GDP. If you look historically over the past 100 years in the U.S., debt to GDP averaged about 60 or 70%. Only once did it go above 100% prior to this, and that was coming out of World War II. The playbook back then by the Fed was to let the economy run hot through nominal GDP growth while capping interest rates. Debt to GDP now is at 130%. Actually, the Fed needs inflation to put that debt to GDP genie back in the bottle.
So, for the folks at home watching, I mean, what is one to do in an investment portfolio? Where do you want to be exposed? I mean, how liquid do you want to be here?
Well, I like the phrase, cash is trash. One of the slides I put up was looking how gold has significantly outperformed every fiat currency on the planet over the past 20 years. And I believe the best is yet to come.
For gold?
For gold. No question in my mind. I think by the end of this year, we're going to see not only gold at all-time highs, but at levels that I think will shock a lot of people.
Really?
Yeah.
Shock a lot of people?
Shock a lot of people.
Above 2,500?
Yes. I believe so.
You mentioned central banks before. You obviously saw the headlines. They haven't bought this much gold ever. Ever. Isn't that telling in itself?
I believe it's hugely telling. I mean, so what they're doing is they're selling their treasuries and their government bonds and actually deploying those U.S. dollars into physical gold. If that doesn't say a lot about their view of what's coming, I don't know what does.
I have to laugh because, when Bitcoin first burst onto the scene and when it was when it was rallying, we come to the gold conferences and the number one question is, well, Bitcoin versus gold, right? We kind of took a breather after that crypto carnage. Just your take on, the crypto market. I mean, we're speaking after all that, like I said, the damage done to the crypto market. And do you think that gold proved its point?
I think it has, but I think there's more to yet come. I think at the end of the day, when we look back at this crypto experience, we're going to say, what were people thinking?
Only time will tell, Rudi. But it was an absolute pleasure speaking with you. Thank you so much.
Great to be with you again, Daniela, and I look forward to next time.
Absolutely. And thank you for watching. We'll have more great content coming your way, so be sure to stay tuned to the Daniela Cambone Show. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.